All right, what is going on, Discord family, and welcome back to another edition of Market Review with me, T. Hobbs. Today is Saturday, March 1st, 2025, year of our Lord. And I did not trade my funded account yesterday. I did end up taking a PM session trade that I'll talk about on a Combine account. It was a really good short. Came just shy of my fucking TP, but I did end up taking profit on it. But I want to talk about a lot of things that happened today in the market. Mostly that has to do with context, right? So we're not going to do our traditional market review because I just don't have a pre-market plan to kind of go off of and say, hey, this is this, this is this. I mean, obviously I can go back and tell you guys, hey, I chart before the market opens the next day. I always chart my chessboard if you guys have been studying that. And everything played right into the chessboard damn near perfectly, right? Like anytime the chessboard most of the time lines up with the previous day low. So you get Tokyo sessions sweeping the previous day low. And anytime you see this candle right here, I mean, I know you see this candle structure, but like anytime you see this candle structure in conjunction with your level, right? Your 3 W's, your where, your why, and your when. Watch out for that video. I'm going to be dropping that soon. But anytime you see this wick here, but it's in your area, and then it's followed up by consolidation inside of the CE, right? This is like a no-brainer long, to be honest. And if you miss this long, right? I don't trade Tokyo. I wasn't up, whatever. Cool. If the market comes back here, oh my God. This white line right here is 50% of CPI, okay, from January 15th. We've already proven that we want to buy from here, right? The market came up and broke structure, right? This was the high that it needed to get above. It did that, and then it liquidated straight down to this level. Like when I tell you this is like the triple decker of confluences, you don't need any other confluences. But today we're not going to talk about confluences. We're going to talk about context, right? Because the confluences are cool, but sometimes you need a little bit of confluence. I mean, you need a little bit of context, right? To understand like, okay, where we are. Now, I'm going to give you some context in regards to the Dow Jones, but it's going to make more sense when I go over to the NASDAQ and the S&P 500, just simply because of the way price was delivered. So if you guys ever come in here and we do the top-down analysis, right? Like if you don't do anything else, if you hate how much I talk or you don't understand any of the levels, just do me a favor and draw a line for the weekly projections, bearish and bullish. If you don't pay attention to nothing else, draw those lines, because I promise you, if the market is moving based off its usual data or its average data print, those levels are going to come into handy very, very well as you travel into the week, right? So the weekly projection, the reason why I bring it up is the weekly projection bearish for the Dow Jones was 42,915 and 42,712. And that was from the weekly and the current daily fib respectively, right? So if we go back to Friday, right, this was the weekly fib right here, okay? 44,090. Notice how Monday we didn't get to the week. Hey, give me a second. Go on mute for a second, Budo. I'm recording
the live stream because I can't hear anything.
Hey, Budo, go on mute real quick. I'm recording. Hold on a second.
Yeah, still not hearing anything.
Hold on. We have some technical difficulties. But anyway, so sorry, I had a Budo in my ear, brand new guy. He just got in here and he's having trouble with his audio. Yeah, man, just go out and come back in. All right, but anyway, all right, so the weekly fib right here, right? So 44,090, okay? Notice how the market was unable this week to trade above or back into 44,090. So this weekly projection is actually good, right? The percentage is more important though, right? Like because we never know where price is going to go and put the high of the week in or whatever, right? So this week on Wednesday, you can see Monday, basically from Sunday to Friday, the Dow Jones was in consolidation. Even though it felt like we were doing a lot of movement, we were just in consolidation at the low of a range, right? Like at the low of a downtrend. But if we take the highest point of the consolidation, right, and we go down 2.67%, because that was the average, right? 2.67. What does this tell you, right? Like you're like, oh well, Hobbs, it didn't play a part. No, but it gave me context, right? The market was on average moving about 2.67% to the downside. We were in consolidation, and the consolidation was only yielding 1.79% or 1.8%, right? Which tells me that we're having an underperforming week. Even though we're moving a lot inside of this consolidation, we're just in a range, right? So as long as we stay above this weekly projection, every time we come down to the next fair value area, i.e. the CPI candle in this situation, right? 50% of the CPI candle, I'm looking for buys. Well, what is my designated high? Well, whatever Monday's high was, that's the first high, right? So 43,826, just draw a line. Okay, 43,826, and then Monday's low. Just draw a line and be like, okay, if we don't break out of Monday's high or Monday's low, that's the range. And every time we come up to that high, right, if we just draw a line here, right, if we're looking for range bound, we go up to Monday's high right here, right? That's the high, and then this is the low, okay? This is Monday's low right here, okay? These two purple lines. Look at how we perfectly just go in between this range, right? And this is why I say context of the market matters. You have to zoom out to give yourself context, because if we look at the daily candles, look at this. We were never really out of Monday's range. Essentially, all we did was stay into Monday's range all week. Now, think about that in a sense of your intraday trading, right? Let's go down to the 1 hour chart. If you understand that the market's in a range, right? When price is down here, are you doing anything else other than looking for longs, right? Like that just eliminates your entire bias to go short, right? Like if you get up here and we're at the top of the range and you know we're consolidating, are you looking for anything other than shorts, right? This is Monday's price action. Monday, shorts, where down to the bottom of the range. But at first you didn't know Monday was going to be a range, but you knew this gap needed to get filled, right? I actually took this short into this gap fill, right? Tuesday, 3 a.m., we were at the low, came back up to the top of the range, right? Wednesday or Tuesday, we came up to the top of the range. Wednesday, we came up and tapped and got above it, but then we found more selling, got back into the range, right? We go into Thursday. Thursday did the same thing, went right back to the top of the range, failed at the highs, came back down into the range, right? Then we swept the highs and we swept the lows. Before the market leaves a consolidation range, it needs to sweep the highs and sweep the lows. In this case, it swept the highs, failed to take the lows. Then it swept the highs again higher, and this time it actually took the lows. And that's when we actually found the buyers, because then we came up here aggressively. This is very convincing buying, right? Continuous buying, and then followed by an aggressive liquidation and a double bottom. That's your inverse head and shoulders about to start forming, right? What I anticipate going into next week is us to come back down and create that other shoulder somewhere, maybe put a higher low or something like that, trade down to start the week so we can start climbing back up. Remember, we are in very, very heavy discount, right? The market is in discount while also being in a bearish trend, right? So just understand how the market is being developed. So I wanted to throw that out there and then go over to a different instrument so I could show you guys kind of like how this shit works. I'm gonna go through 3 different instruments, right? I'm gonna just based off that information, right? Okay, so this is the S&P 500, right? The S&P 500, the weekly projection was 2.64%, right? From the weekly fib, okay? The weekly fib was way up here, right? Friday, since Monday, we never could make it back up there, but that doesn't mean 2.64% wasn't important, right? Because The percentage is way more important than the level, right? 2.64% is what we was looking for, right? Look at that. 2.64% took us right down to the end wall from the high of the week. Look at that. Like perfect 2.64%, right? So when I write these levels, these projections, the important number is the percentage, not necessarily like, oh, Hobbs was off. Like, was I though? Right? Like, I'm not wrong. I'm just estimating from where I think price could deliver from, right? Remember, the only unpredictable part about the market is the delivery process, right? Nobody knows exactly how the market is going to deliver or where it's going to deliver from. But the data you can't hide from, right? The average movement on the S&P 500 on the week has been 2.64%. Now that all of the data that has printed, let's go and review that process. This is Wednesday's high, is the high of the week. 2.64% from Wednesday takes us right into the end wall of 58.6450. Now the difference, context, right? That's the data. That's the hard facts. Context. What's the difference between the Dow Jones and the S&P 500 in regards to structure? The Dow Jones was consolidating all week while the S&P was still expanding to the downside. That's why you notice these candles were much larger, right? And we actually were able to get through our weekly projection because we were expanding. The Dow Jones was unable to get toward its weekly projection because it wasn't expanding anymore. It was in consolidation, just like I showed you previously. We stayed within Monday and Wednesday's daily candle all week, right? That's not expansion. That's consolidation, right? That's a range, right? And the sooner we understand the context, the more important it is to learn how to trade it, okay? Or the easier it is to know how to trade it. Now, why do I tell you this? Well, if my weekly projection was 2.64% and it's Friday, right? I'm going into Friday. Let's say you don't trade in walls, you trade supply and demand. There's a 4-hour demand zone down here. I know because I trade supply and demand and I just took it off because the in wall was here, okay? You wake up on Friday and you just say, how far down are we on the week? Okay. If you wake up and you see, man, we're already at 2.64% for the week and it's Friday and we've been selling all week. This is where context matters. We're at the low, right? We're in major discount, right? Like we're below the weekly fib, the daily fib, the previous day low. We're at 2.64%. We're at the end wall and we've sold off all week. Which one is more likely? Is it more likely that the market continues to sell from this level? Or is it more likely that those sellers that have been in profit all week or who have been loading in positions all week will most likely move to take profit today and send the entire market green? If you go back and look at any heat map, the entire market was green toward the end of the day. Why? Because context matters. If this is 2.64% and we've already hit that level for the week, guess what? They're setting in the PM session, right? Let's go down to the 1 hour. Let's see what time this market decided to go crazy. Oh, 1 o'clock. I wonder why. Because by the time the 1 p.m. session starts, we're not even worried about New York AM anymore. This is a whole different session, right? So the New York AM hit its weekly projection at 2.64%. As soon as the AM closed, it was game time. It was free game for the PM session to go and put in a new, no, out. What's up, Bubba? What do you want to tell me?
Can you give me some more juice?
Some what?
Some more.
Yeah, I got you. Give me 2 seconds, okay? All right. Hang on a second, guys. All right. Okay. All right. So yeah. So sorry, kids. It's Saturday, but so ultimately, what I'm saying is that as soon as PM session opened, right, that gave free reign for the market to now go and put in new highs in preparation for the next day of price action. I gotta get a lock on my door. So context matters, right? Like, so ultimately we get all of this selling, we meet our criteria by PM session for the week, right? Like the week was basically closed after the AM session closed, right? The new session, PM session, is actually preparing for March 1st, right? Like is moving into the next month. It's setting the sentiment for the next month. Think about it like Friday was the end of, it was the last day of February, right? It was basically, even if they bought this thing up 100 points, right? It still was going to end February red. And they knew that. So they could buy as much as they wanted to toward the close because they really buying for March. Context, right? The context of this matters. All right, let's take a look at another one, right? And I don't know if anybody was around, but Valdez asked me this question, and I knew he probably was thinking about price the same way I was thinking about price. He was asking me, what was the weekly projection for the NASDAQ? What level was the weekly projection? He wasn't asking me because he was thinking, oh shit, well, I guess we continue to sell. Like, no, he was probably looking like, man, we're at heavy discount. I mean, look at this thing on the daily. This is November 4th lows right here. This is the election day lows for the NASDAQ, right? When I saw the NASDAQ, when I finally looked at price, I wasn't really looking at price. When I finally looked at price and saw where we were, I said, oh my God, this is about to be a short squeeze. One, the 3 W's, right? Your win, your where, and your why. Our where is a major discounted level, right? Like this is the Trump candle lows. That's what I call it, right? So the where is definitely here, but then you got the why, and there's so many whys as to why you should have been looking for longs down here. Let me go through them, okay? Number one, we're talking about the weekly projections, right? The 3.81%, 3.82%, right? Let's go and turn on our price range tool, and you should be doing this on a daily basis. Like this should be a part of your prep, right? It's a part of my prep. It literally takes 2 seconds on a Tuesday or Wednesday just to see, you know, what's the high of the week or the low of the week, and what is my weekly projection for the week? This thing was projected to go down 3.82%. Okay, look at where 3.82% goes from the high. Now, mind you, my 3.81% was here from like the weekly fib or something like that, right? Which was way up here. We never made it back up there, right? So then you go from what the high was. The high was here, and look where we went, 20,589. We ended up going down to 20,460, but that's just the unpredictable part of the market, right? The market's not perfect. You just have to give it a little bit of room inside of your thesis. Ultimately, once we got down 3.82%, I'm no longer looking for shorts, period. That is what I'm trying to tell you contextually, right? That's one. 2 reasons to look for longs. We're below 2 weekly fibs, pretty much 3, but the previous week's 50%, February 3rd's 50%, daily fib, previous day low, and our projection of the weekly is way the F up here. Why are these important? Because I'm going to use these as targets, right? Because this is where I thought the market should have been delivering from, right? It should have delivered if we were, you know, somewhat bullish. We come back up, retest the weekly fib, and then we deliver down to here and here. The market wasn't even bullish enough to do that, right? So there's your why. I mean, your why. And then the question you have to ask yourself is, well, when do I want to enter this trade? Well, ask yourself this. In regards to the sequence of price, right? Let's just turn off these macros, all that shit. Like I don't need none of that, right? Like it's a good visual aid, but I don't really need it, so to speak, okay? We stop at our 3 W's. And again, this is a little bit on unorthodox market review because I didn't write a pre-market plan, but I thought I'd take the opportunity to teach a different lesson, right? So if we look at the daily demand zone, right? And we start our day, most of you guys start your day at 9:30, which is fine. Like it's a great session, right? 9:30 candle. Just look at this fucking bat signal right here. Like this is literally the bat signal. When you see rejection blocks, inverted hammer candles, I don't give a shit what you call it. When you see these big ass wicks inside at levels of major support, demand, major supply, you know what I mean? Resistance, it doesn't matter what you call it, to be honest. It's all the same shit, I promise you, right? Whatever your vocabulary that you relate to, I promise you there's another vocabulary in somebody else's thesis that means the same shit. Whether this is a rejection block to you, whether this is an order block, whether this is a trend line break, it doesn't matter. The question is, can you recognize it? Okay? Can you recognize it in whatever language you speak, right? And when you see these candles at 9:30 and they break above structure, at 1 o'clock, they come back down here. You have the perfect 3 W's. Where, when, and why. Your where, heavy discount. Your when, PM session lows, right? Right at 110. And your where, when, and why. Yeah, and then your why is because another one of those big ass candles inside of the CE of this previous candle, right? Take these longs and you just take the foot off the gas. Just walk away. This market ain't coming back down from here, right? And it's just because the nature, the context of what's happening in this area. I got one more, and this one played out to the absolute T. And of course, you know I'm talking about GC, okay? So GC did exactly what I wanted it to do, okay? If we look, oh man. From the all-time highs, 2973-ish, right, is what I was looking for GC to drop from. We ended up putting the high of the week at 2973.4. Like, look at this. I literally wrote it. 2973.4 from the all-time high, 3.02%. That's exactly what, like literally I gave you the absolute top of GC, right? It dropped down 3.02% from there, right? And then I said, hey, we could go down again 3.02% at the weekly projection of 2867. This is why this is important though. Not to say Hobbs was right, man, he killing that shit. No, that's not why I'm making this lesson. 4-hour demand zone. Again, perfectly tapped right back into this level. But why am I looking for longs here? This is the context, okay? I'm looking for longs because we're below the estimated projection for the week, okay? And it's Friday, and it's the end of the month, right? It's the start of a new month, a new sentiment shift, so to speak, right? If you will. We're at demand. We're below the weekly fib from February 3rd. We're below the weekly fib from this or last week, right? And look at the target. Like, Jesus, I wish that I saw this. Like, when I tell you this is a no-brainer, you don't even gotta think, okay? You don't even need a stop loss, right? I'm not condoning you to trade with those stop loss. I'm just saying how clear this was, okay? 110 right on the money, right? 115 straight to your first target, weekly fib here, second target right on the money, and then gold closed right at 3.02% down. I'm telling you guys this so you understand the importance of preparation, right? When you prepare for the week, right? You don't have to go in depth like I go because I'm gonna do it for you. But at least after I'm done, it would behoove you to at least go back and watch the video. And if you're trading the instruments that I'm going over, just write the levels down. I'm giving them to you. Just put a line there and see how price reacts, right, throughout the week for those areas. If you want to know how I'm doing it, I made a video for that too. I don't gatekeep shit. Everything that I do in here, right, as soon as you pay that fee at the front door, which is very minimal, right, you have access to everything I know, everything I am learning, and everything that I can teach you. All you got to do is ask, right? I'm going through this market review in a thorough manner, right, to give you guys a different perspective of how I view the market. I don't just view the market with confirmations, right, and maybes. I view the market with context, right, and a very strategic approach to looking at the market. So that's all I got, man. This was the market review. Like I said, a little bit unorthodox. Sorry about the interruptions from my kiddo, but that's all I got. My name is T Hobbs, and I'll catch you guys on the next one, man. Peace.